space. Thank you, Nigel, for that. But let's move on to the primary market now. LED lighting solutions company IKIO Lighting's IPO today opens up for subscription. It is a 607 crore issue with fresh issue over 350 crores. Offer for sale coming in from Hardeep Singh and the Sanjeet Singh. It's basically Hardeep Singh and Surmeet Kaur are selling about shares worth 257 crores. The implied market cap at the higher end of the issue price is close to around 2200 odd crore rupees. It is a company that provides LED lighting solutions and original design maker, and LED lighting accounts for 90% of their revenues. We have with us the management professional to join in. Sanjeet Singh is with us. Shortly, we'll be joined by Hardeep as well. Sanjeet, thank you so much for joining in. Just trying to figure out, as far as the business is concerned, I mean, I'm looking at their revenues. FY20, the revenues was close to around 140 crores with margins of around 18.7%. That jumped all the way to around 222 crores in 220 crores in FY22 with margins around that 18% itself. The first 9 months of FY23 have been strong. 241 crores in terms of revenues, 20% margins. The only bone of contention here, Nigel, is that 70% of their revenues comes in from just one client. That's Philips. Okay, we do have Sanjeet with us. Sanjeet, I'm looking at the objects of the issue. Part of your IPO proceeds going towards expansion of your new facility in UP. What kind of capacities will that add for you? When does that complete? And what does that mean in terms of overall revenue, incremental revenue for you?
Yeah, hi. Actually, the numbers that you stated right now, they are not the pro forma consolidated numbers. So if you look at the pro forma consolidated numbers, in FY22, the top line was close to around 334 crores. And in FY23, in the first 9 months, we've already done, the exact same, close to the exact same number. It's 332 CR, that is the top line in the first 9 months. Like you mentioned, the business that we do for Philips, in FY22, the revenue share was close to around 62%, and in the first 9 months, this I'm talking about pro forma consolidated numbers. So in the first 9 months of FY23, the revenue share is close to somewhere around 51%. That is, with the constant growth that we are seeing with Philips in the ODM space that we are with them in the high-end home decorative lighting space. It is largely due to the fact that the other verticals that we have, they are relatively new. We started a lot of them in the past 5-6 years, and they have been seeing very strong growth. That is one of the main reasons why the Philips revenue, although the growth is there, it is growing year on year, but it has come down from 62 to 51%, the revenue in our revenue share. And okay. Coming back to your question, I really cannot give you any forward-looking numbers. That is something that we are restricted. But I mean, the capex that we have planned, which is close to around 235 odd crores, which is going in segments. Around 105 we'll be spending on infrastructure, and around 98 crores is what we have planned for plant and machinery. So like I mentioned, I cannot give you the forward-looking numbers of the top line that the capex can generate, but typically, if you look at the kind of business that we've been doing, the FA turn has been in the range of 5 to 6, and going forward, once we hit that 60%, around 60% capacity in the new plant, the FA turn is going to be similar to what we've been doing historically.
All right. Hi, Sanjeet, and thanks so much for giving us a fair bit of those details. Sanjeet, this is Nigel on this side. Could you tell us, with this new capacity that you're picking up for 230 crores, if I heard that number correct, what does it take your total capacity to? I believe the current capacity is around 21 million pieces. You could correct me on that number. You could tell us where is it headed, and also at peak revenues. We're not asking you for a forward number because we want you to obey with what the regulator is saying. But when you list, we'll want to know that number. But for the timing, you tell us what is the peak revenue potential of the company?
See, again, if I tell you the peak revenue potential, that will anyways will have to disclose a number to that. But I think that the best way to look at it is by the FA turn. That will give you a fair bit of an idea. Like I mentioned.
So you said the FA turn, the turn is around 5 times.
Yeah, around currently it's around.
So that's about
1,000
crores of potential revenue in this one, right?
So that that is something that I cannot say anything.
You cannot say, but you've said that 200 crores is what you're investing, and the FA turns on these assets are usually 5 times. So we've done 2 and 2 together and given 1,000 crores for our viewers. Just wanted to understand, you said that Philips' revenue contribution is declining as everything else is growing alongside it. Just wanted to know, while Philips is a large customer for you, how much of their revenues do you contribute? I mean, just trying to understand if there are other dealers who Philips deals with in the LED segment as well.
So actually, LED segment in itself is a very big and a diverse market. So the space that we are in with Philips, that is the functional decorative lighting space. It's as per the report by Frost and Sullivan, it's a 21 billion INR market. That's I'm quoting a number FY22. And Philips, has the largest share in this category. That's close to around 50%. So 50% share is with Philips in this particular category. And, we are contributing to around 45% of their requirement. If I talk of the functional decorative lighting space, that is the high-end home decorative lighting space.
All right, Sanjeet, what about exports as an opportunity? It used to be just a couple of percentage points. I think it was 4% odd. Now it's moved to mid-teens. Do you see this as a bigger opportunity going ahead?
Yeah, definitely. Actually pre-COVID also we had the export unit. We had set up the export unit in around 2019, and then suddenly COVID happened. But I think it was sort of I would say, if I look at where the growth potential we can see, it was a blessing in disguise, I would say, because post-COVID, what has happened? I mean, we were ready pre-COVID too, but post-COVID, the world has certainly opened up, and everybody is looking for that China plus one strategy, and we are definitely gaining from that, and we already have two different set of verticals that we are working on for the export market. Primarily, right now, our market is US, although we are expanding to different countries as well. But in the US itself, we have two different, verticals. We are doing products for the RV industry, that is the recreational vehicles. So we are manufacturing a whole host of products in this category, lighting and products apart from lighting as well. And then we are doing some industrial lighting as well for the US market. So these are the verticals that we already have. And post-COVID, we are seeing very good, strong, growth and demand in this category.
Right. Your cash flow from operations, at least in the numbers that you provided us, the non-pro forma ones, have been negative for the last couple of years. This is largely due to working capital pressures. In the pro forma numbers, how do they compare? And what's your view on being cash flow positive going forward?
See, last 2 years, I always, tell everyone that was sort of a blip in the system. COVID happened, which, that was something unprecedented. And I don't think anybody globally was ready for a situation like that. And so that was one of the major reasons, why we had the working capital cycle went pretty high. And that was the reason a lot of cash was blocked in the inventories. One simple reason for that is, all these semiconductors and electronic components, they're not made in India. So you have to depend on imports. And the lead times, they went, straight away from a generic lead time of 4 to 6 weeks, from 4 to 6 weeks to 6 months, 12 months, 18 months, for that matter. So, so what we had to do was, we had to do a lot of spot buying. We had to make sure that we were carrying enough stocks to, continue the production running, the production lines running. And in fact, we took this as an advantage because, being an ODM, we were able to quickly evolve and change our designs. And that is something that we've learned during that phase, that we need to have multiple designs, multiple sources. And this is what we've been doing now. And as a matter of fact, the working capital cycle, is constantly now coming down because that peak COVID effect is not there anymore. And to answer your question about cash flows, in FY23, in the first 9 months, it is already positive. We have generated a healthy, cash from our operations in the first 9 months itself.
Good to know, Sanjeet. Thanks so much for stopping by, giving us a brief idea about your business. So we've understood business, but I'll tell you what, when you list, we'll want a few more numbers. And at that point of time, hopefully you could share that with us. Wishing you all the best. For the time being, though, we'll slip into a short break. We come back, we'll continue to focus on the markets. We're nearing the day's low as we speak.